We're going to start tonight with stocks catching Fed fever. The Dow surging over 500 points, closing at the highs of the session. Its best day since January 4th, 2 days before my birthday. Techs and financials leading the way as Fed Chair Jerome Powell said it will do whatever it takes to keep the economic expansion on track. I didn't believe there still was a Fed put. So did the Fed put just save the markets, or is this Fed fever getting too hot to handle? When they went on pause, it came back from December, 20%.
20%.
So you get a half a point. What's that worth? That must be worth something.
Great question. And welcome, Joe.
Thank you.
Again, doing yeoman's work.
I don't show up for less than 500 points.
500. Up or down?
Up or down.
Tall bar.
Right.
So we can only hope then for tomorrow.
Basis, yeah.
I mean, another 500 tomorrow, you're back. Is that what you're
Don't
saying?
count
Will
us
you go
out.
on
An
record?
absolute move, or it's an up move of 500?
I like up.
Okay.
I like up.
Good to
Up's
know.
better than down. Well, so is did the Fed is the Fed save the market? Obviously for today it did. Now, Tim alluded to this yesterday. The conditions were absolutely ripe for a move like this in both bonds and equities. And Kernen spoke about this a couple weeks ago in terms of if the Fed were to have language of this magnitude, it would be very bullish for the market. I think it's bullish for a day or a couple days. But again, I still think we're headed back down to 26.50. Now, I know we got to 27.30 or thereabouts yesterday. It's only 80 or so handles. I think that's still the move. I think the fundamental problems that are taking us down still exist. And the Fed can talk all they want, but I'm not certain that they're as powerful as they were maybe a year or so ago.
Well, whether the Fed is right or wrong in doing what they may or may not do, I think markets are so far ahead of the Fed right now, Joe. I don't think the Fed told us any of that. And in fact, what was interesting about today is today you had a two-day Fed kind of a research meeting going on in Chicago, where the tone and even really the speeches themselves were already out there, and you got that sense that the market was reading a lot into this. If I go back over Charlie Evans, if I go over Vice Chair Clarida, if I even listen to Kashkari, who's the uber dub of this group, not one of these guys said we're ready to cut anytime soon. That's what I heard. And I think if markets really are expecting the Fed to jump in here, where we've averaged 3.2% GDP, where we've got unemployment at 3.8%, by the way, I'm quoting Clarida in that, I think the market's offsides on this.
Well, I'll tell you the one thing that the market could be onsides, though. That meeting and subsequent other meetings that they've had this year have all been about the new policies that they're going to come out with and potentially inflation targeting. So they are going to stay a lot easier for a lot longer until they get inflation above 2% and probably let it run above 2%. If the market is reacting to that, then I do think that's relatively bullish for stocks. The market is in a position where it could get disappointed if they think, well, listen, we're going to get 50 basis, 25 basis points, and that's it. But if the market's reacting to inflation targeting, then I think this is sustainable.
Yeah, and even with tariffs, we had a discussion this morning. Tariffs, it's like your mother, your sister. You bring inflation, but it causes a slowdown. So what's Charlie Evans on our show this morning on Squawk Box was talking about, we've got room. We've got room with inflation. Even with the tariffs, we're not necessarily worried about that coming through, and they'd like to err on the high side of inflation.
So are you saying, though, that there will be inflation and the Fed still won't do anything, or there will be inflation and that's okay and the Fed will have to do something?
I think that they'd like to err above 2%,
yes,
is what I was
agreed.
hearing from Charlie Evans.
Right.
Yeah.
I think they used to have will be data dependent. Now they say we'll be patient, which I hear as we'll let it go past 2%.
Right.
We don't need to stop. We don't need to react to that. So, I mean, it's not shocking that we get what is interpreted as a little bit of dovish data. I think that given how badly the markets were oversold, this was a really nice rally, but we're only back to where we were Wednesday, right, after that horrific month. So it's good in the short term, but I'm still very concerned that we don't have a deal. This is the most I've been concerned in a while. I think that the longer the uncertainty is out there, the more difficult it is for businesses to feel confident and to spend, and then we get into this vicious cycle. And I don't think this really changes.
But it sounds like we are all saying that today was all really mostly about the Fed, that there's not really a glimmer of trade, despite the fact that Mexico showing up in the White House. And
Chinese ministry said some stuff
something
that
nice,
seemed less...
sort of, less mean.
Well, we had Mike Wilson's colleague on this morning.